Howard's going to talk. I'm not going to play the whole clip, but he's going to talk about what he calls a sea change, S-E-A, sea change. He's talking about a secular cycle. So we have business cycles that run like every 6 to 8 years on average. Now this last cycle coming out of the Great Financial Recession has been kicked further down the road. COVID, a big part of that. So we've gone on, call it 14 years until we started seeing the headwinds start to hit last year. Typically every 6 to 8 years we have a business cycle. They can be various ranges of that. But a secular cycle is like 40 years. So within a secular cycle, you're going to have business cycles during that time. Got it? Then beyond a secular cycle, there's what's called a seculum, and that's like 80 to 100 years. A bigger picture, I'll talk to you about that at the end. So while we're always looking at the business cycles, well, are we in a recession? How long is this recession going to take? Is the Fed going to pivot and start pumping money back in the system? I mean, everybody's got an opinion, right? You could look at that, but you also have to look at the longer cycle, and I think the longer cycle is interesting. So I'm going to let Howard speak a little bit about that.
Howard, welcome. Fresh off that memo everyone's talking about.
Thank you, Sarah. It's nice to be here.
It's good to have you, and happy holidays. So let's start with the sea change. That was the big headline from your report. It's how you kicked off your memo. You said 53 years in your investing career, there have been 3 sea changes, and we are in one of them. What does that mean?
Well, a sea change is a major transformation of the environment, a complete change in attitudes, etc. And I suspect that we may be at the beginning of one. The first one was the fall of interest rates from 20 to 0 between 1980 and 2020, which had very, very positive effects. The second was the opening of investors' minds to what we call risk-return analysis. And before the 70s, the job of the investor was to avoid risk. After the 70s, it was to intelligently take risk, and that was a big change. And I think that we may be on the doorstep of the third.